Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, April the 14th. So, this morning, the big news will be news out of Wells Fargo, and in particular, JP Morgan Chase with regard to Q1 earnings. And what we're going to want to pay attention to most are delinquencies and their loan loss reserves. So, in recent days, and this is what's going to put pressure on the housing market, if there's an adoption of the lending standards that JP Morgan has just implemented on new mortgage applications, that you need a credit score of 700 minimum and 20% down. If you see the rest of the industry adopt that underwriting criteria, well, then the housing market is in a lot of trouble in the at least the near term until we find out what's really going on with the outcome of the pandemic. So I'm not sure what time the earnings will be released. Guaranteed, though, they will be released before 8:30. Again, watch out for their loan losses, delinquencies in credit cards, delinquencies in mortgages. Those are all forward-looking indicators. What else you'll be watching for is news out of China, if you can call it news. Let's call it propaganda. Propaganda out of China with regard to a second wave of outbreaks of the pandemic. Now, I don't know whether or not this is a plant, and frankly, I don't really feel all that comfortable with even speaking about this. So I just want to caveat that because there are a lot of shorts out there that would like to see a narrative put out there scaring people. I have a short position, but I'm not in the business of trying to scare people. So uh, just keep an open mind that if this narrative takes hold, the concerns out of China about a second wave of the virus, that's going to be a big, big headwind for this market. And the Chinese will, of course, state that it's imported. And we have to really view their narrative as, again, being pure propaganda. So just keep a look at the headlines. Let's go to the pre-market activity and see how the markets are behaving, and then we'll do some stock chart requests submitted by members. Excuse me. Good morning, Kevin. Good morning. All right. So let's begin with the dollar. The dollar these past couple of days has been weak, and it remains weak, along with bonds. This is a 4-hour chart. These all be 4-hour charts. Bond prices were down yesterday, along with the U.S. dollar. So we appear to be holding the Sunday evening lows here. And perhaps we'll rally on less than worse than expected negative news out of the banks. Remember, we also have a United Airlines coming out this morning as well. Let's go to gold. Now, gold is a bit of a concern, despite the fact that we are up this morning. We have broken down below this lower band of support, And these three bars, you saw topping action, topping tails, wicks, shadows, candlesticks. Call them cupcakes. I call them sellers. So we have some selling above. We did break down below this lower band of support. And we're not looking at a new lower low yet on this new 4-hour bar. I suspect they'll wait until bank earnings to come out before they either bid gold back up or continue the selling. Now, I view any pullback here on gold as an opportunity. And in particular, I'll be looking at the banks, not the banks, the miners, looking to add more to those positions, especially if I need to roll out of short positions today. Today's a real litmus test for me. I'm going to look to see whether or not, even though we get less worse than expected numbers, I'll hold on to at least a portion of my shorts to see whether or not we fade at the end of the day. So it's all about the close today, not necessarily about the knee-jerk reaction. I'm concerned about the close. FL Boomer, good morning, Bob. AUMN, when you can, Barrick just entered a partnership with them. I was thinking very long term, thanks. Okay, if I get a chance, I'll be more than happy to do that. That's Barrick. That's gold. Silver. Silver flashing a bit of a rebound overnight. We are up a little over 2%, giving back some of those gains. We have not taken out the highs of last Thursday. So no new weekly no new weekly high yet. And that matters. The question then becomes, are we stalling out here? I'm long of silver. I want silver to break out even further. I believe it will. But in the short term, maybe we're taking a rest here. But the path of least resistance with these higher lows is clearly to the upside. Now, news yesterday out of SoftBank was very concerning. This is the Nikkei composite. That bank had a huge loss. And the Nikkei just shrugged it off. Because speculation is that the Abe regime, the Abe government will go in there and bail out SoftBank. And the Nikkei is looking pretty good here, up 2%. Now, taking a look at U.S. equities, I checked intermittently overnight, and we held gains fairly steady overnight. While we were down this last 4-hour bar, no new low. This 4-hour bar on the NASDAQ 100, we're up a little over 1.25%. The chart looks healthy. The NASDAQ, the S&Ps, very similar to the NASDAQ in that we don't have a new lower low, and we were down that last 4-hour bar. Of interest is RSI. Potential lower high here. And on price as well. So here is our resistance level. And support. And I expect that we'll have a resolution to this wedge formation by the time the markets open up at 9:30 this morning. What else do we need to go over? Let's take a quick look at the VIX. As you might expect here, actually a little bit different than what you might expect. We're very close to putting in a new hourly 4-hour bar here. Let's go back to the S&Ps really quick. Yeah, what's interesting is that we have a bit of a divergence. This prior to last 4-hour bar was up, while the VIX, no, this is accurate. This is accurate. Okay, good. I thought I saw a bit of a divergence. We don't. Okay. Still early here, folks. What else do we want to go over? Let's take a quick look through agriculture. All right, we're seeing a rollover here on soybean oil future, meal, weakness, oats. No breakout yet, very close to it, consolidation range. Looking for a protein here, either cattle or hogs. Forget it. Let's go with natural gas. Now, natural gas last week began to show signs of life. I want to go to a weekly chart really quick. We're forming a base here on natural gas. I don't think it's a buy yet, but we're certainly seeing signs of life. Last week we had some topping action. I mean, if we see a close above 1.93 to 2, I think that we could have a heck of a rally here on nat gas. So UGAZ is definitely on our watch list as a potential long. But I don't want to buy it yet. Right now it's in Never Never Land. So we'll look for a breakout here. But ultimately, this upper band of resistance is going to be the line in the sand. Let's round it to 1.95. Good morning, Danny. Oil? Yeah, we can go over oil. Harry, hi, Bob. Are your thoughts on uranium stocks? Love your show. Thank you very much, Harry. We'll take a look at uranium. I think URA is a symbol, right? For the ETF. Wall Street not reflective of Main Street? No. No. Wall Street's reflective of the expectations of the Federal Reserve. It's really, yesterday we saw the four major banks come out and do a complete reversal about their expectations for lower lows, retest. They're all predicting higher highs. They raised their numbers, all because of the Federal Reserve. Don't fight the Fed. So, if that's the consensus that everyone's bullish. I mean, even the roundtable on Fast Money yesterday, they were all perplexed. I mean, none of them were bullish because the market. And finally, you heard Karen Feinerman. She started parroting what I've been saying is that you the here. Let's go to a chart that I've been talking about quite a bit, and usually on Sunday Night Futures Live, I've been going over this chart, and whoever they were interviewing, some lady out of Invesco, she was talking about all the liquidity the Federal Reserve has been pumping in, and Karen Feinerman, to her credit, said, "You know what? That's fine, but back in 2008, right back here, the beginning of October, that's when TARP was signed. All the liquidity was being pumped into the market. Yet the market didn't bottom out until 5 months or so later. The lady had no answer for it. All they're doing is parroting the new narrative. The narrative up until early last week was that we were going to do a retest of the lows and quite possibly break. And in particular, Goldman Sachs reversed their call. Now the new narrative, and I'm kind of glad they did it because the narrative is generally the wrong direction, is that we're going to go straight up. And the only reason why we kept going straight up yesterday was because of huge short squeezes in Amazon, which frankly, on an intraday basis, is pretty overdone. And Netflix, leading into the third standard deviation Bollinger Band. These stocks are trading at 94 multiples. So, and that was brought up yesterday as well, that stocks were expensive back in February. Today, they're even more expensive, which is another thing I've been parroting, or I've been saying, and they're parroting now on CNBC. And the consensus is that it doesn't matter. And it doesn't matter until all of a sudden it does. So that's why we've been hanging in there, not aggressively adding to shorts, but holding what we've had and fighting through this rally these past few days in an expectation that, maybe we're going to have a shock and awe moment with the release of the comments out of the big banks this week. Especially, I want to hear the comments from Jamie Dimon, who's got a pretty sharp tongue. So it's going to be a very, very interesting morning. And frankly, I was rather surprised to see the strength into the close yesterday on the markets in advance of the earnings today. Because this is going to be our first real glimpse into what's really happening with the consumer. Are they paying their mortgages? Are they paying their loans? Are they delinquent on their credit cards? And if the answer is no, and you have a minimum credit score of 700 to get a loan, what's that going to mean for housing? And I need to go over the housing sector in a moment. And that was a request, too. I need to write that down from one of my members. Manoj, I don't know if you're out there. I did get your text. Okay, let's go to some. We appear to be holding these 4-hour gains here. Let's go to some chart requests. And some symbols that we're watching. This one caught my eye yesterday. I forget the symbol. Fargo, where the heck is it? Lost it. Let's see if I can bring it up. All right. So I want to talk about Slack a little bit. This is one of our watch stocks, and it really hasn't caught a bid. And this is in the communication space, and with Zoom doing very well, there are other derivative plays out there that I'm interested in. And you take a look at Slack, if this market does not sell off, and it may just not, I'm looking for a breakout here on Slack as it is putting in a higher low. And we are very close to a breakout here, or a breakdown. We're right at the apex of this wedge formation. So I'm going to set up an alert. Okay. We'll keep this active for a few days. All right, we're good to go. See how Zoom is holding in there? Zoom looking really good. I don't know whether or not I would chase it here. I think I like to set up better on Slack. I just don't like chasing stocks, especially in a bear market. All right, so we'll keep an eye on this one. I don't think we're going to trade it, though. URA. Good morning, Cherry. RL, good morning. Yeah, Lulu. Cat, I was looking at Lulu as a possible short the other day. This is Sunday night. That may have changed by now. Ah, look at this. It dropped yesterday, 2%. It still looks good as a short. What's going to be interesting is when you have the negative crossover of the 50-day down below the 200-day moving average. And this 50-day moving average becomes resistance. Declining resistance, no less. We have clear resistance above. The question is, what's the entry to the short side? I think at a minimum, a new daily low would be warranted. Or even better, a rally up to the 205.54 level, a breakout intraday, and a failure to hold it, and a fade into the close. That would be very interesting to open up a small opening position and then lean into it on a breakdown below 198 spot 06. Stokes on a 2-hour basis of declining. Let's overlay here some Folks, this charting software, if you're not familiar, is TrendSpider. There's a link down below if you like having automated technical analysis. And what you're looking at here in dashed line are daily resistance levels and support levels on a 2-hour chart. I think they're the only ones that offer that. These stokes are weak and getting weaker. So, Kat, it's an interesting play to the short side. I like it. But a close above the 205.50 level, that would probably negate it until such time as we broke back down into this trading range. But it looks good. Ideally, we get a new daily low, and we get that negative crossover of the 50-day down below the 200-day, and that'll be a technical breakdown. And especially if we close down below 195, I mean, that would be very, very attractive. I will warn, yesterday's down volume was very, very light. MACD losing momentum here. I like it to the short side on a break. Let's see. Roku, I know they popped after hours yesterday, RL. And they're probably going to continue up higher. This morning, they're already inching up out of resistance. They're very overbought. Intraday, we have RSI at 79. Doesn't mean it can't go higher. It's a pretty chart. And we will have resistance at around the 109 area. And that'll be right here at this upper band of resistance in black. So there's more upside here for Roku. And in this environment, it's probably going to do pretty well. It's probably going to get there. So I like Roku. Yeah, that 109 level looks to be a good price target. Where are we at current? Yeah, we're at 108. So we're right there. This is not reflecting the pre-market activity. It says pre-market here too. It's not reflecting the pre-market activity on Roku. So we're already just shy of resistance. I'll be careful here. Watch for a breakout above, a close above this upper band of resistance on a daily basis. Yeah, I just saw your note now, RL. Yeah. So we're right at resistance. I'd be careful. When do you think we will retest the lows? It's a great question. The consensus at current is that we will not retest the lows. That means that we're probably closer to retesting those lows than what we might expect. So, to answer that question, I don't know. I think that we will. I'm standing by that. I think what may happen here is one of the charts. I went over this on Sunday night that I'm really keeping an eye on because it's a truly a unique chart in that it's so rare in how frequently it happens. In that we broke down. This is a quarterly chart, S&P 500 going back to World War II, the end of World War II. And this is last quarter. This is Q1 2020 in red. And we broke down. This is in the books. It's done. It's happened. There's no way to rally back and pretend it didn't happen. It happened. We are down below this lower band of support, which is active support since going back to 2009. At current, we are flirting with every inch of the market's body and the Federal Reserve's dry gunpowder trying to buy back that prior lower band of support. I think personally that it fails. Let me zoom in here. It's not going to carry my annotations over, but you get a better view. And there you have it. Where did we close out yesterday? 2761. In my book, this 2850 mark is the true line in the sand for this market. You have a lot of overhead supply there. It would be an overshoot above this at current. What was support is now resistance. And if we close above it this quarter, well then I have to eat my words. And I'll do so. But the probability of it happening, I think, is unlikely. And we may just have to wait until we're only in the front month of Q2. We may have to wait until next month, maybe in the last month, before we get a fade. So we'll have to be patient here. And if the markets do not react to the negative regarding this quarter's earnings, then we need to lighten up on shorts, face the reality that the street's in charge here. The Federal Reserve is certainly in charge, and they are going to push this market up higher until they can't. We are seeing a breakdown on a quarterly basis, down below support. We have lower highs, lower lows. It's in the book. This is not salvageable anymore. This is history. Same deal here on RSI. Lower highs, lower lows. So this is the higher level view. This is a very, very high level view of the market at current. And very few are looking at this. Way too many people are looking at intraday charts and daily charts, trying to divine the next day's move. Really, I'm looking at it from a very, very high level view. Cat earnings may be a game changer, bear flags. Yeah, it's good. I think so. I think that at current, the markets have been focused on the Federal Reserve and what they may or may not do next. And they shot off a bazooka last Thursday to negate the jobs numbers they knew were being released. Is it any wonder that their bazooka was fired off at the same exact time that those unemployment claims were released? I don't think so. There's no coincidence there. And it worked. In the short term anyway. Are they going to fire off a bazooka every single time there's huge, disappointing numbers coming out? I would argue probably not. But you never know. This is such a strange time. Thomas, the bazooka shot off at the 1 yard line to buy more time. Perhaps. I can't argue with that. Oh, did I go over oil? I didn't go over oil, did I? Last I looked, oil was down again. Yep. I know the president was trying to jawbone oil up yesterday on Twitter, and that did not work. So we're down 1.67% on the morning. We're off the lows slightly. We have a new daily low. I think the key to watch here is the weekly chart. You're seeing a higher low on RSI. And do we break to new lower lows? Or do we hold this lower band of support? And are we able to break out? It's as simple as that. Until we break out, this is purely a spectator's game, because I can't short it on a break. I would only entertain it as a buy on a breakout. Again, it's a spectator's game. I would avoid that current. Taking a look at, I want to take a quick look again at gold, because the price action earlier was disturbing. Yeah, we continue to give up gains here this morning. And we have a new lower low versus the prior 4-hour bar. And this could be the pause that refreshes. But if they rally this market up higher, you have to wonder, with the risk on trade, will they give gold buyers a second bite at the apple and sell off gold and silver and the miners? And I kind of hope that they do if they send this market up higher. Because right now what we're seeing is deflation short term. But longer term, they are sowing the seeds for a lot of inflation. And what they're possibly looking to do is to manage the yield curve and basically take it away from traders as being a forward-looking indicator of how the economy is doing. And that will mask inflation to a certain extent. So when the eyes of inflation rear its ugly head, it may just come out of the blue. So we're entering a very, very strange time, very dystopian, very Orwellian. Let's go to uranium. And I need to go over the builders. URA, I believe the symbol is. I traded this many years ago. Wow, nice rally here. Here it is. I knew I had it. Back here is where I traded it. All right, so I like this chart. This is a pretty chart. It's a monthly chart. And while we don't have a breakout yet, we have an inside month thus far. And I think it's a little bit too early to get long here. Where do we close? 966. In fact, let's go back here for a moment. All right, no breakouts here, but a very strong reversal this month. And these Stokes are like a coiled spring. see if I have any other charts here. URA weekly, good. All right, so we've come a long way here, and frankly, my view of uranium at current with this weekly chart is very similar to my view on the overall market. We've come a long way very, very quickly, and we have a lot of overhead supply above. So I don't know whether or not I would step into the breach here and begin accumulation. I mean, we have closed above, or we are trading at current. I shouldn't say we closed above because it's still early in the week. We are flirting with a close above resistance at 9.50. But you have such a ton of overhead supply up here. I couldn't buy at current. Let's go to a daily view. I would defer to the monthly chart and watch for close above. As a matter of fact, let's bring it up on, make it easier. Okay. Where do we close? We closed at 966. If you're dying, you're going to scratch the itch. You're going to make this trade no matter what I say. Watch for a pullback and a retest of 941, 940 to 941 per share. Scratch the itch there with a stop loss right below on a monthly basis. And if we rally up to 1030 per share, you could add to that trade. But there's a lot of overhead supply up here, as noted by all of these resistance levels. So here's your daily chart with a monthly overlay. We're trading above monthly support, one of them anyway. So I think that if we hold this level this month, we're heading up here to 1030 per share on the URA. So one business amount of money that's already going to be dished out. I don't think there's enough money that they plan on these small business loans. I think they're capping them at $15,000, at least in the Northeast, California, probably Texas. That's not enough money to stay afloat. I think that they're burning money, to be honest with you. What are your views on real estate? What happens to the Airbnb rentals and over-leveraged apartments? I think they're in a lot of trouble. At least with nobody's traveling right now, right? At least with if you had a lease, you have people that are in those apartments, and you're getting your income for the most part. There was a report put out the other day that in the month of April, 30% of people were behind on their rent. But what they didn't tell you, or at least they put it in the footnotes of the report, this is published by the Wall Street Journal, is that they decided that people who did not pay their rent were 5 days behind. You had to be 5 days behind. Well, the report was put out early last week, and there were only 3 business days in the week. And historically, 20% of the people are delinquent in a portion, and according to that report, you had to be paid in full on your rent to be considered current, or otherwise you would rated as being delinquent and added into that 30%. So if you have historically 20% of people that are already delinquent on their rent, and you only had 3 days, business days of reporting available, I think that was a little bit of bit of clickbait on the part of the Wall Street Journal. So it's concerning, yes, but I would want 30 days, 60 days worth of data before I drew a conclusion about simply how bad the rental market is or the real estate market. And in all probability, it's pretty bad, let's face it. And it's only going to get worse given the underwriting criteria that we're seeing now coming out of JP Morgan Chase. Now, they're not the biggest mortgage lender, but they are certainly a leader. I think Quicken is now the biggest mortgage lender. Let's take a quick look back here, see if anything is happening on the banks. It's probably still too early. Yeah. Okay. Let's go to the home builders since we're on that topic before I forget. Let's bring up the HGX. This is the home building index. And I think this is one area that is a potential short. And I'm not all too worried about the Federal Reserve going in there and buying up home building stocks and keeping them afloat. I am worried about them going in there and buying the triple Qs or the spiders, which is why I'd rather focus now, shift our strategy from shorting indexes to shorting individual names. So at current, on a weekly basis, the home building index is flashing an inside week. Daily chart. Right now, we're still in a trading range. I don't know whether or not I would short it. Let's take a look at KB Homes. So we have resistance above at 24.95 on KBH. If we close down below 1860, I think that KB Homes and several other home builders with similar support levels then become a short. So I wouldn't short on the expectation of a break. I would short on the event that KBH is breaking support. Okay, yeah. Sorry about that. AUMN. Golden Minerals. Beautiful day yesterday. Now, they entered into a deal with Barrick. Any details on that? We're right at resistance, right there. Here's support at 25 cents. That entire range was covered yesterday. MACD is going positive this week. It's very bullish. This is one of my favorite sectors, the gold miners. And correct me if I'm wrong. I'm assuming that you mentioned Barrick, that this is a gold miner. Again, correct me if I'm wrong. Yeah, we need to close above 31 cents per share on a weekly basis. We close there. We're going up to 35. And if we close above 35, we're going up into the mid 60s. So I like the setup here quite a bit. And I think you could, and this is, I can't give financial advice. I think that we can see a pullback in the short term, and I'll tell you why. And on that pullback, you can make a purchase. Gold and silver. Okay, interesting. U.S. based or Canadian, Australian? So I would just be careful here on a daily basis. We are leaning into the third standard deviation Bollinger Band. So relative to that Bollinger Band in red, we're a bit extended. We had a big move yesterday, nearly 18%. Intraday even further. U.S., okay. So I like the setup here. Obviously speculative in that it's a penny stock, but if it's got a partnership like that, that's pretty good. And on a historical basis, using a weekly chart at least, it's looking pretty good. Let's see if I pick off anything on. I use TrendSpider as more of my spell check for support and resistance. So nice, this is a daily chart. Nice consolidation here off of this rising lower band of support. Monthly resistance is at 35 cents per share, which makes sense. Yeah, you get a break above 31 cents per share here. That's very, very attractive. Stokes are rising. And this sector is in fuego. And nobody is talking about it. You know, Peter Schiff's talking about it. Mike Maloney's talking about it. I'm talking about it. Not that I'm in their league in terms of economics. But CNBC, you know, they'll make mention of gold because it's making a new multi-year high, but they spend very, very little time talking about it. So I like the setup here. It's a good looking stock. Can it go to $10? You know, I don't know. It could go to $100 for all I know. I'm not that smart. I don't like to. You know, it's been $10 before, so it certainly can go back again. I would assume. So sure, why not? It can go to $100 for all I know. But I would worry about baby steps. You know, don't worry about $10. First, it's got to get past 37 cents. And after it gets past 37 cents, then worry about 64 cents. Then $1.16, then $1.59, and work your way up. So Baby steps. All right, with that, folks, I am going to say everybody have Z-Bob. Is that a symbol? Hold on, me. Oh, and I do need to go over another symbol for one of our members. I forgot all about it. All right, I thought somebody was throwing a symbol at me there. All right, love. This is for our fellow member Charlie. I'm going to sign off after this. He asked me to go over this one. Could have sworn. All right, the love store. Let's go over this. All right. Nice reversal this month versus last month. We did a retest. Love it. Love the retest. We held last month's lows. Weekly chart. Stokes setting up a double bottom setup. No breakout yet. Need to see that breakout. Higher lows on Ultimate Oscillator despite the fact we're seeing still downward pressure. Watching for a move higher on RSI, stochastics. RSI is already moving higher. Resistance at 6. Daily chart. Down day yesterday. Again, resistance at 6. We got to close over 6. Let's take a look at that's a monthly view. Here's the daily view. Let's throw some overlays up here. I doubt we're going to have any on a monthly basis anyway. Nope. Go with a weekly. So the next resistance level after 6 is $7 per share. To 790. So I would watch this stock. I wouldn't buy this stock yet. Here's a 4-hour chart. Consolidating nicely. I would watch for a breakout above these resistance levels. And let's just do this. Okay. That would be attractive. A close above that level. All right, with that, folks, I'm going to say everybody have a profitable trading day. Watch out for these. Oh, FL Broomer, I'm in Suffolk also. Sold in New York. Shout out to SUNY Stony Brook. That's where my son goes. Some neighbors here. Good to see. Watch out for bank earnings this morning, folks. It's going to be. I can only understate the impact of bank earnings today. And keep in mind that the knee-jerk reaction to anything in this market is probably going to be the wrong reaction. And the closing price of today is going to matter quite a bit. Do we rally and then fade into the close? And that's what we'll be looking for. So I'll catch everybody tomorrow morning on Swing Trading Today. Thanks for joining in. If you could smash that like button, I'd really appreciate it. Thank you very much for joining, and be well.